Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. With the bullish divergence evident over the last few days, I have pointed out that there was a possibility that we could see a rejection from this lower side of the range and look back towards the top side of 68 cents. And as you can see from the overnight price action, the market's done exactly that. With the bullish divergence advancing, the ADX trend has been depleted and therefore we are looking up towards 68.40.80 and reassess from there. Later today, the Reserve Bank of Australia is to meet for the final time this year, with the current forecast viewing the cash rate to remain on hold as it recorded low of 0.75%. It is anticipated at 2:30 that the bank will keep interest rates unchanged, but do be on your guard in case we get some surprise, and therefore could see the market plummet back down. Either way, the statement is the most important thing to see how and what the central bank is viewing ahead. And therefore, if we find that the market is a little bit neutral in terms of the statement, or we can see a slight less dovish response, then we could see a bit more of a squeeze in this price action for the Australian dollar and look towards this level of 68.40, which is where I've outlined as a supply zone. Technically, though, we can still get up there, so do be on your guard. And if so, wait for the opportunity before taking the step into trading. And from this region, we should see a rejection back down towards the bottom side of the range of 67.55 or lower. I also outlined yesterday there was bullish divergence in the euro. Now, from the bullish outside range day on Friday, along with that, we've got a confirmation from the break confirming the outside or engulfing candle. The market rallied overnight and now poses a threat towards 111.15.25, which again, like the Australian dollar, would give us opportunity to shorten the market. As I do believe we should see a rejection from there and eventually see a move back to the downside. Still to come, though, is this Wednesday we have the ADP non-farm employment change, followed on Friday with the most anticipated number to come through, which is the non-farm employment change. The market will be expecting around 187 from last month, and therefore could see a little bit more strength in the US dollar in terms of seeing this euro eventually reject the level of 111.15 and look back towards 110.30. And the downside objective still holding at 109.50.70. But as you can see, we did get a rejection from the 109.70 resistance in dollar yen. From that, the market has actually posted a bearish outside range day and still expects further weakness, with the immediate target seen at 108.70 to 108.20, with the minor resistance seen at 109.25. Overnight, disappointing US economic data along with fresh trade worries, have once again given investors safe haven appetite for the yen strength and the dollar weakness. A report from the Institute for Supply Management, the ISM, showed overnight that the US manufacturing activity contracted in November for the fourth consecutive month, as new order volumes slide back around the level of around 2012. The Institute Supply Management said that the ISM, is the index of the national factory activity, missed its forecast of 49.2 and came in at 48.1, with the previous at 48.3. A reading above 50 indicates expansion in the manufacturing sector, and a reading below, which is where it is, indicates contraction. Still ahead, we've got to the countdown of the December the 15th trade deadline. And no doubt we'll see more choppiness. So therefore, keep an eye on these indicators, as I do expect to see them move to these targets that I've outlined. Little to say on the pound, we're still trading sideways and waiting for the election, which is on the 12th of December. No doubt we'll see a bit more movement as we get closer to that date. A nice bullish dragonfly coming through here, and the rejection of 1,450. Still needs a confirmation, though, to the break to the upside. Although the bulls are still lurking, a break above 1,465 would give us a target, and still calling at 1,478 to 82. Wrapping up with oil, the market's still respecting this trend line around $55 a barrel, and I do anticipate further strength to the upside and look towards 57 to $58 a barrel, maybe even further to the target of 59 to 61. Beneath $55 negates this view. Well, that's a wrap for today. Thank you very much for joining me, and as always, look out for the intraday report and hope you enjoy the great start to this new day.